Mm-mm. Hey guys, morning. Doom to doom to doom. Alright, hopefully the stream wouldn't break up this morning. Alright, what we had last night was break today's upside small and then you had the London trade. We made a little profit on last night's trade on London. So, trade what you see, trade this plan the trade. We're looking back for that test at that 20 to 25 range. This data just now. You know, it's always buggy, so we're looking for that 20 area. We want to see what's going on there and then place the trade. We're looking for a 10 a.m. trade there. Deviations as follows for today. We're using 12.25 as stops today. Although the market increased, we see a little bit lower volume. I had to reset some stuff on the Trader Weight platform. So bear with that. You can see the ranges we're looking for 0.5. Looking at that one deviation closely to the downside today. 2550 will be important as value low to the downside. The market is now open. You want to see quick bounce to the upside and the reaction from that 2520. We're looking for this value area high to lock. So this is where we have working order set up. That's off still on this. I need to see if stuff as default on this. Make that to reset. Looking at that 21 very closely there. We do have one single order sitting on the live one. Yeah, if you want to use the structure stops, use the structure stops. We do have one order sitting down here at 51s, 52s. It's real with orders. It looks like a lot of brackets, but we know exactly what we're looking for in the area. Two kill zones are built. I want to see the action from the opening of the market. I want to see where the trade actually happens. As you could see, last night we had a pretty good night to position a trade there. We did some work off of that area. Where is my volume stop? Good lord. CL and the key contracts there. Yes. The volume looks a little bit lower, so that's why we traded a smaller range today. And it stops and the range. And so you can see that opening test out there. It looks like a lot of lines, so I'll just pull off what I do have on. Well, like I don't need to have right now. Looking at that 20. It's activate into a certain position or as you open that, working order. We know there's a key level, we know we have structure. We want to make sure that structure is here. And just make sure what my bracket setting is. Okay, pull this off and set up my bracket today at 12.25, 48, 49. Fix the stop loss. So make it to show exactly what it is that I got on my live. Info plus looking for 12.5. So I can trade the second stops if you're looking at how we gonna manage this one. My trade is actually built with the longer time frame one the trade stop. So exactly how it's built. Or my system. You could also look for that point of control if you're aggressive moving, where we're looking at the lower end of the buy. And to see positive reaction, there you see the delta. Good, like this, so you can see delta easily. Oh, I did not open my chat box. Fuck all that. Stop screwing with me. You blast the technology. And on the oil chart. CLK. Right, so what we're looking for is if the gap does not fill from opening to close. Let's check what it was closed yesterday. Right here at 20 is where we have looking at a set right up here at 2001. Have I read my brackets? No, it's set up here. CL. We have working order set up here with 50 points at 2001. It's our actual entries. We know why we place it at 2001. There is a particular reason. You could do a smaller stops. You use the stops to 20 points, 20 ticks on it. Make sure you'll be just behind structure, that's all. So if you do get slips, you'll get slipped one way or the other. I've already dealt with the oil, so I don't need to deal with it. Oh, I need coffee. You can see this is the wrong number, so you'll have a pretty good fight here. All that is locked node. We closed at 2611 yesterday. Let them make this decision. You can see doji on initial high volume. You can see volume is lower than what we've been seeing. We were looking at 2000. You could not see exactly. It was only 1200 this morning on the open. Had a bigger push to the upside. Market did not quite react in the first 5 minutes. So that's where we was talking about opening range traded. On what he looks to lean at. So the whole idea is as follows. If you're looking for a gap and go situation, is if the gap does not fill from yesterday's close, it was according to this open at 23. I think yesterday's probably it will be a little different from the open and the close. What I do have sitting out here on the buy side is at that 25.54 level. In the initial, we want to see the bounce and use a buy stop there. A single limit we have sitting on the outside, and then up there we wouldn't be interested in buying anything, buying or selling through that point. We at least want to see that 2610 hit, grab that gap, and then move to the downside. Go to 50-minute chart to show that a little bit more clearly. I am short on a weekly option from 2600. They want to see that node lock there. I didn't see it locked as yet, so that's why we don't have a decision yet on what we have to act on. Let the market do what it wants. Yeah, 2000 so far on the downside. Let's see, there's a big fight in this area. At least volume becoming a little better for us. It's a trade-off because high volume and high volatility will be risky trading stuff. I did some rebalancing on the portfolio, so bum, 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 bum. 1700. Now this is where bars has become a little bit, because for a bar is really is a visual representation of order and order flow, price versus delta. So what it looks like delta. We're looking at particular prices. 2610 is only where we'll be aggressive based on what we've seen in the market. We want to see what the order flow is. You have no real momentum gain on either side as yet. Want to see what 10 a.m. does. Location, time, and price. Price action determines if you enter in a trade or not. We do have setups we're looking for and working orders we try to work off of based on what we see in the market. Let me get some coffee. You see there's a flip and that's why we don't want to be involved. We know exactly what that area is, what that area poses to be. That poses to be a whippy area. You can see that is building. Going down the bar. Always it is advised to have the counter on the bar. You want to know what the actual location is, where you're looking at, where you're looking for price action. Move your orders as appropriately as possible. If you're trading live side, make sure you have a good internet connection. Talking about that. I wonder if it bring back up my speed. The worst officer bring it back up. Yeah, back up plus 75. Plus 75 like 15 or something, or 20 or something. Yeah, check back now. Yeah, still toppling on the upside. Yep, still toppling. Yeah, yeah, no, I don't want to do that. Right from on the actual territory. So yeah, delta swing from negative 1700 to positive 1600. Price goes nowhere, and we are at that 2600 lock. Zero commitment on either side of the market. Order flow is stuck. Make sure we're not at 500,000 yet. There's a little bit of commitment coming in the market. That's where I didn't push up to the POC. There's the order flow coming in a little more on the order flow. Let me see the break. Push down. That 2080 level is an important level. 2580 is in 2080. I already have my options sitting over there for weekly, so it's not naked, it's spreading. Going into options will be too complicated. You can see where the delta fight was there on the opening of the market. Market order flow is down. We want to see is a push a downside, return back to the upside here. Try to get into a cheap trade with single outside here with big reasonable size big profit. 12 points a loss. We want to trade one contract with a trade in live. Have your booking order sitting with one or two contracts on the outside there. Based on, well, I think Dante asked that question this morning on my top step. What's up? They, yeah, so Dante asked that question this morning, and they have the particular reason. It's protection. they will require protection because they would be running a account. Remember, if you're running a fully prop traded firm account, it is still a margin account you're running in the background, so they have to maintain their margin level. They have risk analyzers to analyze what risk. So that's where you see the stop in trading and stop is protection for both them and yourself, because they would have a margin account and leverage account on the other side back end. So just know that as part of education is a known thing in industry, because you can't run that sort of pricing without having certain amount of leverage built in into the system, into trade management. Highly doubtful that they're using um, if they're using the white label for the execution, because I think the trade of it they have is I don't know, I know for the demo itself it looks like the white label. I do particularly use the dome. So we have 10 minutes at 10. What I would like to see, would like to see, they're getting that cheap single order trade here with that 1.5 or view structure as my TP is a little further break that 80 level as I was speaking about, looking for at least a touch of the 80 return, then join the bears and have a tight stop, looking at any little small structure I could find to the upside here to be able to defend, to join the sellers in the market. You know, you could always be wrong in your analysis, so, and your location is not ideal, so that's why you trade half or no more. Stuff is about style your levels. Always look to style your levels when you're doing it. When you're looking at the trade, look at getting locked into that point of control. See that point of control right there? If you get locked into that, you could get into that cheap trade with a high risk to reward. And make sure you do your costing pretty well. So you can see you had some positive delta. Market did not react to the upside, and then you had the negative delta provide order flow. So you're trying to follow the order flow. So this will be talking about order flow and order flow system running through that. So where you look for the ideal situation, or you look for having that on the system. Alright, so you want to see test the 80, return to the upside, look for the structure right there, point of control. If you do get it, the most likely push would be to that value area low. There will be more than that value area low from yesterday. There's a test of 80. So if you're short 2600, that's your optimal TP area. If you're on a single contract, you're short in the market. See what's the up to. And approaching a dip coming. Did not put the last thing low, the same high volume value area. Boom, 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 bam, 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 bam. Boom, trend, equally profile, swing low to swing high. You guys know I don't deal with dailies, I deal with value stuff. See breaker value there. See where the trigger came in and you had some more selling coming to the market on the overnight. And they lost the area yesterday. You see why we have the stuff is sitting right there. See clean break at the point of control. If you're looking to be added there, you need to have your stops way behind you, behind that 87. So you can see that 2080, 25, I think 2080 was with me this morning. That's it, a bio. Yeah. Okay, I need my coffee. You can see your point of control drop from one area to the next. You look for your high volume node to the upside right there. This is 26. Look at the peg a single offer that use tight stops. So pull in this, use some tight stops on it, use your opening range. Looking for 8 points. Above here and above here, not above there. Looking for that, if support is found, looking for that 2600 to act. You see where the high volume nodes are, 2602 to 2600 flat. 2600 is the round number, which is why you'll do that, and you still have, so that's just a single you're looking at. And use extended targets if you're required to, if you have it trading one contract here. If you don't get to trade, you looked at the market, that's all I wanted. I'm just gonna grab some coffee. I put that working order in on live, so I'm trading a mini today off at that level. today. 28 reactive. It's 1 minute to 10, so yeah. It might be a boring this one. Because 8.75. Let's see what's low. I would have taken what 1 point, 2 points a hit. So you want to know quickly if you're right or wrong, and it's in the what you're running the order flow. So what we're looking for is tag break return tag continuation. So yeah, the high came down, pull back, tag, push, tag, push back up, continuation is the play in the open market. You want to see I get in to here, and I just build the kill zone. Don't want to build too much kill zones. Let's work off this being a kill zone here. This is the adjusted kill zone 1. So what I'm trying to show you here is where I have water sitting outside. And this is not trade advice, people, disclaimer. This is what exactly just what I am looking at. Right, on the node. You can see where the node is, so I was looking at yesterday. Right there, you want to be inside there. You want to be right there. So 1 doji, bottom air kill zone, top air kill zone of the doji. Rejection doji. I always want to see a wick. See a wick like this. So we know exactly where our stops are. We know if we get shot with a small amount of risk with a single. Usually we look for 2 to 1 or like this 8 point risk. We look for structure or that, so this is adjustable. So we watching liquidity, what I'm showing here is where I'm seeing liquidity in the market. Right now at certain strikes using bookmap. It's interchangeable in bookmap, it moves in bookmap, and most of it is live data. If we were sitting here at 10 a.m. we would have been taking it down. We would sit in here. That's why the long was not possible for us. Always trading with time. And always build your trade plan and your trade ideas, monitor your stuff. Try to get fill at optimal times. Look for your band hit top bottom goal. Next bar of delta will be very important. You see 2000 by 1900. So ideally, if you're trading and you're executing live, what you look for is hit POC tag, trigger with doji, and then look for the downside move. When the volatility was high, I got a couple slips in the market on my live account. And I locked in.
Order filled.
I locked in on my trade. They're looking for up move, gap and go. Now I already made my decision where I want to be in the market here. What is my actions in the market? So I use a lot of working order. It's my style of trading, not everybody's style of trading. A lot of people wait for price to accept, reject, and then join the order flow. My style is looking for continuation. Test, push, retest. Already measured my risk. Know exactly what I'm doing, where I want to be, how I want to be in the trade. And you can see we off the POC right there. If the point of control fails, we know we have a failing trade. If the high breaks, we know the high breaks, that's a failure of a trade. We measure our risk. We accept the amount of risk. We're talking about delta. Look for if you're seeing the delta starting to flip within the band, the entire live trade. But not my style. I accept risk and based on how much confidence I have in the system. If we're looking for the trip, obviously looking for the trip, 2602 to 2600. You see where the 2602 was. It tagged it. You want to see delta start, either delta start to disagree with price here or acceptance. Now you can, from our reason for placing stops like this is because you cannot control the market, and the volatility in the market does not provide enough time to react quick enough in our opinion. Don't need to be watching charts, that particular chart only. I wanted to run in I'll play games after lunch, or lunchtime. Still managing through Tesla. I don't know but when battery they would actually be flat on everything else. Let's see what the mouth guys. There's a surprise. the These guys give me they do just give me, they wouldn't provide a chat or even show it. This guy is angry. He angry, he just angry. Seriously? Seriously? We calling that low volume. Jesus Christ. Trying to show forward as execution, I guess. Let me get stopped out. There's stop here. Nothing. Ngayon, tapaliban. Break off that. We know it's a fail trade. Yep. And break the height.
Stop filled.
You see why I get stopped there. Break off that. Found support. This is the heavy position is for us. Oopsie. And just see the break there, you know, we were looking at that 25 ATR support. And nothing just get flushed, which is highly unlikely. We tried for the continuation trade, failed. Meh. Option prices are weird these days. Volatility, option pricing. So you can see why we want tight stop. There. You want to know as quickly as possible if the trade is a failed trade or not. Delta is to the upside. Waiting for it. Let it do a thing, let it do a thing. That's a lot of volume popping off here. A lot. Yeah, yesterday's close. You can see where stops are located right here behind those. The ideal kill zone right here. Bang, bang, bang. You want to see either a point of control start to act or body start to act. Don't want to kill the kill zones and them too big. It's one of the two ways you can deal with this. I'm just looking for tags and roll out. Because you don't want to have a 12 point or a 13 point stop there, because it does not make logical sense. Logic. You can save yourself a couple $100 easily. I don't see any, well, I don't have a feed. I need feeding. We don't want to see our solar panel. Consumer confidence. Didn't realize it had some 120. That's pretty good. It's a 3 nodes. Make a look for the tag right there at 19. Yeah, it cost $12,000 of margin. Margin requirement. Yes, we really want to accept. We would have to. That's ridiculous. Ridiculous. What? Trading off my margin account is be treacherous. Treacherous these days. That second loss will put me out of the market for the day. Budget is $1,800 to $2,000. Only yes. I always budget everything. Budgeted. Don't want to be too antsy. Consumer confidence probably. Other than that, if it's
order filled.
Filled on the order. It's 32.5 and it's top 5 is showing that. Alright, a secondary. But one that stop, the next one that will stop. Why are you acting like that? And this is what we're talking about, right? So you can see one trailing. The secondary is what is active. Primary is you need to stop, so you want to be cutting down on your risk at all times. Alright, if it's a live execution, listen, this is what you're looking for. Looking at this closely now, as am I. I use a little bit of a different like if we go into right, so I use 68.2. That's why I use 68.2. There's little small differences, so I just try to actually modify it a bit